Hey guys, and welcome back to my channel. In this week's video, we're going to talk about how the chances of a rate increase by the Bank of Canada has just increased, what that's going to mean for the real estate market this summer. We're also going to talk about how the majority of rental investors in Vancouver and the GTA are cash flow negative, what sort of impact that's going to have on the market as well. And lastly, if you stay to the end, we're going to talk about the 10 municipalities in BC that are going to have provincial oversight and housing targets set on them by the provincial government. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you want to chat with me one-on-one, you can book me in the Calendly link below. But regardless, subscribe to this channel so you don't miss a future video. All right, so the big news affecting real estate markets is how the Bank of Canada, it's now looking like they are going to raise interest rates, if not at the June 7th meeting, then definitely by the end of summer. The reason why there has been a shift is because some recent data came out surrounding Canada's GDP, which is essentially a measure of the growth of Canada's economy. So we got the data for Q1 year over year. Analysts were expecting, and the bank was expecting, that it would come in at a 2.5% growth rate. It actually came in at 3.1%, meaning that it grew at a greater clip than was expected. And when that happens, the Bank of Canada has that tool they can use to put a measure on things, to dampen things down. And what that is by way of an interest rate increase. So a month ago, it was unlikely that we were going to see a rate increase during this summer. Now that the odds of that have increased, I believe the analysts are saying a 40% chance that there'll be a raise at June's meeting. But if not at June's meeting, then 100% chance that there'll be a raise by the end of summer. Now, if you watched my last video, you'll see that I mentioned how I believe that this June meeting by the Bank of Canada will be the most important and the most significant of the year. My thoughts haven't changed. In fact, they've heightened. I think it's even more important what they're going to do at this June meeting. My gut is telling me again that we're going to stand pat on the rate, but it's a crapshoot. It's 50-50. Now, if that rate does go up, then what I expect to see, I'm already feeling a little bit of a mellowing out on the market. And I want to clarify what I mean by that. I'm not suggesting that prices are coming down, that activity is dropping off of a cliff. It's just mellowing out. It's doing what markets do. Markets go up, they go down, but they also plateau a little bit. And I'm kind of feeling like we're inching into that plateau territory. So if the Bank of Canada does raise the rate, I expect that buyer demand is going to soften a little bit. Part of it will be seasonal, but at the same time, what I'm suggesting with my buyers is this is an opportunity to capitalize, to get into the market. We may see that opportunity happen this summer. If you're mulling over whether you should be getting into the market, you're not certain, my advice would be to talk to a mortgage broker, lock in a pre-approval, lock in a rate. Fixed rates are increasing as we speak, and if the Bank of Canada raises the rate, we can expect rates to go up further. So you can lock in that rate, and that way you know exactly what rate you're going to get. You're probably going to get a better rate today than you would a month from now, if things are going in the direction that we're expecting them to. But then also when you talk with a mortgage broker, they can help you to outline, okay, this is what your principal and your interest payment will be. This is what would happen if rates change. So it's good to have that conversation now, because again, I think if rates increase, there may be a bit of a buying opportunity to not compete as hard. Now, much of this comes down to real estate supply. And typically in the summer, supply drops off a little bit. So what I've noticed actually in the last couple weeks, which is interesting, is I've actually seen more supply hit the market. And I mentioned this in my last video, that there's more and more homes hitting the market. It's not a staggering amount, but again, as a buyer, I'm really watching this scenario. Are there going to be more properties for me to choose from, and is there going to be less buyer demand? What you want to do is you want to make sure you're prepared, because if that's the scenario that's put in front of you, you're not going to have a ton of time to react or to respond. You're going to want to jump on it quickly. So that's what I'd be thinking about if I'm a buyer. If I'm a seller, you know, what I want to think about right now and at all times is you never want to chase a market in any direction. So, you know, I've been speaking with people that have, you know, a targeted price in their mind for a price they want to get for their property. And it's always just a level above what the market is doing. So if the market is going like this, they're trying to target that price over there. And then when they hear in the media the market is hot, this is happening, they never catch up, because even as prices go up, then their expectation goes up. And what happens is ultimately, like I said, markets go up, they go down, they plateau, and they're constantly chasing. And especially people that maybe today they don't have that quite that level of urgency, but maybe they're working towards something. And what I've seen happen is they never get their price expectation met, whether they're on the market or they're not. And all of a sudden, as time goes on, now they're put in a position where they need to sell, they need to make a move, and perhaps they're ending up selling that property for less than they could have at a different point, at an earlier point in that process. All right, so I want to jump ahead to this article and this study that came out by Urban Nation and CIBC, saying that 52% of rental property investors in the GTA, and Vancouver numbers are similar, are cash flow negative on their rental properties. What that means really quickly is when you take the rental income that you're receiving, you subtract all the expenses, that's obviously the mortgage, that's the insurance you have on the property, property taxes, strata fees, whatever it might be. When you subtract all the expenses out of it, they are cash flow negative. And so they're not making money. You're having to actually what we call feed a property month over month. And this is happening significantly again in Toronto. It's happening in Vancouver. When I hear a study like this, of course, it's no shocker to me. I look at it and say, when was the last time that we were cash flow positive on rental investments? My own rental investment, I'm not cash flow positive on the one I have. But at the same time, the reason why we purchase real estate, and I get asked, Hassan, you talk a lot about these rental property investments and not cash flowing and some of the struggles and the challenges that come along with rentals. Why do you still promote it, and why do you still purchase rentals yourself? So for me, like, I'm buying property, I'm buying real estate in Vancouver, and I'm not stopping. The reason I'm doing it is for the capital appreciation, because at the end of the day, if I want to chase cash flow, if I actually want an income from my properties today, I'm going to have to go so far east. I'm going to have to get a property manager in place in areas that I don't want to purchase real estate in. I'm in real estate for the capital appreciation game. I'm in it for the long term. The reason that I suggest to clients to purchase real estate, and if they're doing it as an investment, is over time, our market tends to appreciate at a greater clip than other markets across North America. So you have to have a long-term picture if you're going to be a property investor here. So that's why I acquire rental real estate. That's why I'm acquiring more. And that's why I have a lot of clients reach out to me regarding rental real estate, especially through this channel. So jumping back to the study, one of the key pieces of data that came out was talking about year-over-year increases in rental rates. And when you look at Toronto versus Vancouver last month, Toronto had the highest year-over-year increase. It was about 15%. Vancouver had the lowest at 5.6%. And the reason for this is how rental rates are allowed to be set or determined by the different provinces and how that affects cash flow. So for example, if you're in Ontario and if you have a property, a newer property that wasn't occupied prior to November 15, 2018, there's no set rate that you can increase your rental rate by each year. There's no cap, there's no rent control. Here in BC, we can only raise it 2% regardless of what type of property. And that's why you see this disparity between the Ontario number and the Vancouver number. You see 15% on that side, you see 5% on our side, because all of our properties we're only raising at 2%. In Ontario, again, some of those newer properties, there's no cap on that rent control. Now, I need to clarify something, because every time I do a video on this, I get a whole bunch of comments saying, well, you can't just set the rate whatever you want, and it would be unfair to raise rates 15, 20% rental rates. And that is not what I'm suggesting. But what I'm saying is that 2% is much lower than anything else in anyone's life that has gone up in price over the last year. 2% is much lower than anything else. And markets dictate rents. Landlords don't dictate rents. So when people are frustrated with rental rates, you can't really point at the landlord. You can point at the market and say, okay, this is what has happened because we don't have a lot of rental supply. We don't have a lot of homes. We don't have enough homes. And unfortunately in Canada, what has happened is the small mom and pop investor has become the subsidized housing provider for rentals across the country. And now also being restricted. We used to tie that rental rate increase to inflation. I think now is the time to go back to that especially as inflation ran extremely hot last year. And I've mentioned it before, any bit of increase in inflation this year, it's going to sound small at 3%, 4%, but it's layered on top of the 7, 8% we saw last year. So things continue to get more expensive. Landlords cannot raise the rent. We're in a situation again where we're providing subsidized housing because there's not enough incentives for developers to provide the rental housing. They need to get incentivized. They need to be allowed for more square footage, less community amenity costs. There needs to be incentives for developers to build purpose-built rentals. There's not enough out there and they're not building enough. And now the onus falls on the landlord. And now the landlord's in a situation where they can't recover their costs in places like the GTA in Vancouver and other areas across Canada. So I mentioned off the top that BC has finally come out with their municipality list, their 10-city list that they're basically going to set housing targets upon. They're going to be watching closely these municipalities. And in fact, I didn't memorize them off the top of my head, so I'm going to read them out to you so I don't mess it up. But the communities are Abbotsford, Delta, Kamloops, Port Moody, Saanich, Vancouver, Victoria, the districts of North Vancouver, West Vancouver, and Oak Bay. So those are the 10 municipalities, and they didn't just pull these municipalities out of a hat. They had a formula that they went to decide, which communities, and they looked at how much affordable housing they have, how many housing starts they've had over the last period of time. So they had a formula. They came out with these communities. Not shocking to see Vancouver and West Vancouver on there. Not shocking to not see Burnaby and Coquitlam on there because those are very developer-friendly type of communities. Most of the communities are, I wouldn't say happy, but they're open to what's ahead for them. Now they're going to have Premier David Eby and Housing Minister Ravi Kalhan watching over them closely. So if you're a developer, that's your list. Keep that list. Those are basically the communities that are going to be pushed towards approving new housing units. So keep a focus on that. Again, most communities, they're open to it. One that is not is West Vancouver. The mayor came out of West Vancouver and said, we don't really want to be building homes that people aren't going to move into anyways. He would like to see some more data on it. Now, obviously, West Vancouver hasn't been extremely pro-development, definitely not pro-mass development. They are land challenged as well. But that's the 10 municipality list to start. So it's going to be interesting to watch how these city councils work towards approving new housing. Are they going to be swifter? Are they going to be moving away from as many public hearings? It's going to be very interesting to watch, so keep following on my channel because I will be following that on a monthly basis. All right, guys, so there you have it. That's this week's video. If you enjoyed it, hit the like button because what that does is it sends the video out to more people so they can learn from it as well. Subscribe to this channel as well if you like this weekly real estate content. And if you're in the Vancouver area and you need some help with your own real estate situation, you want to talk with me one-on-one, you can book me in the Calendly link below, or you can send me a text, give me a call, shoot me an email, whatever works best for you. But I want to thank you for joining me in this week's video, and I look forward to seeing you in next week's video.